If you're on the fence about starting an online business, today I want to share with you 10 tax strategies that you can use as an online business owner that you can't use if you're working for someone else. In other words, if you're in a job. Ready to go? Let's do this. Hi, my name is Jim Hart. I'm the founding attorney here at Hawthorn Law, where we help online business owners just like you get your legal house in order so that you can focus on what you do best, and that is building a business that's truly going to matter and make a difference in the world. Now, if you are stuck in a 9-to-5 job that you hate, you might be thinking about starting an online business, and maybe that's the way to go. Just yesterday, I was chatting with a friend of mine who has a day job, but also has a side hustle selling products on Amazon. He started this business because he, like many of you, wanted to build a business that would give him the time, location, and financial freedom so that he could work when, where, and how he wanted without having to work at a full-time job for someone else, which he's doing right now, by the way. But the time and location freedom from starting an online business are only part of the equation. Today, I want to talk to you about the financial aspects of your online business, specifically 10 of the top tax strategies that you can use to increase your income and legally pay less money in taxes when you own your own business. Almost all of these strategies are going to be applicable to people that are business owners. If you're working for a job and you don't have a side hustle, they're probably not going to work for you. And that's because when you work as an employee for someone else, you pretty much have no control over the amount of money you earn or what you can deduct from your payroll. Now, you can deduct things like health insurance or your retirement plan contributions, but that is about it, and those deductions are going to be limited. But when you start to own your own business, or you have a side hustle, or you are owning rental real estate, then these deductions and the strategies I'm about to tell you about really open up and can provide you with some huge tax savings. I get that some of you might be scared about the prospects of starting your own business. Working for someone else in a job is all you have ever known, or perhaps you're earning a very comfortable living, so the prospects of leaving that job to follow your dreams are incredibly scary. But I want you to know that you don't have to leave your job to take advantage of the strategies I'm going to discuss with you in this video. And frankly, I wouldn't ask you to. But remember that the main reasons you may want to start a business in the first place, the time freedom, the location freedom, the financial freedom, even starting a small side hustle could put you on the road to getting all of these things into your life. Let's jump in to the top 10 tax strategies that I want to tell you about for 2020 that you can use when you own your own business, whether that's a side hustle, whether that's rental real estate, whether that's an online business that you cannot use when you are an employee. I'm parched. I just talked a lot. I need a bit of a break here. I've got my mug. One of the tax strategies I'm about to share with you is something that I'm going to be using with this office that I've been talking to you about for a couple months now. I really want to transform this space. We're going to talk about that here in just a second. So the first strategy I want to share with you today is writing off supplies. Those could be cameras, cell phones, laptops, iPads, drones, speakers, microphones, etc. It could even be like what I'm about to do for this office is furniture, desks, plants, bookshelves, things that I need to purchase to outfit this office right here and change the way my YouTube studio looks moving into 2021. All of those things, provided that you're using this equipment or furniture for your business, it's 100% deductible. This is a huge thing that most people completely forget about. It's like low-hanging fruit, and you really want to take advantage of that. If you've got some things that you need to purchase for your business between now and the end of the year, there's still time. Go ahead, make those purchases, get them in before the end of the year. Number 2, travel expenses. This can include airfare, hotels, houses or room rentals, rental cars, valet parking, taxis, rideshare trips through vendors like Uber or Lyft, trains, tolls, etc. Now, how do you make these deductible? You have to meet with a client, you got to meet with a vendor, maybe you attend a conference or event. You could even conduct your annual meeting for your business during that business trip. Or what I like to do is shoot a video on the trip that I can use on my YouTube channel because it's in a specific location that I can somehow incorporate into my business. All these things are great ideas for how you can deduct travel. But you do have to be careful with this. You're not going to be able to go and shoot a YouTube video in Hawaii, take a 2-week trip to Hawaii, shoot one YouTube video and say, I'm going to write off the entire trip. That's going to get you into trouble. Make sure you talk to your accountant. There are limitations in how and the ways that you can make this work for your business. Number 3 is dining and entertainment. Now you can still deduct 50% of the cost of meals that are used for a business purpose. So if you meet with a client, again, meet with a vendor, meet with a referral source, you're going to a networking meeting, anything like that where you're paying for food, you have to eat. The IRS recognizes that, but they do impose a 50% restriction on the amount that you can deduct. You can't deduct the entire meal, 50% of the meal. Number 4 is the home office deduction. This deduction was literally made for online entrepreneurs like you. So long as you have a dedicated space in your home that you use to work on your online business, or any business for that matter, and you don't have another office outside the home, then you can take the home office deduction. I know that a lot of people are scared of this deduction because it increases your risk of an audit, but if you can support the deduction, you should definitely take it. Number 5 is the vehicle deduction. This is huge. Although it did lose some of its impact in 2020, you can either deduct mileage or your actual vehicle expenses related to the business use of the vehicle. Actual expenses are going to include fuel, repairs, maintenance, insurance, and depreciation of the vehicle. The depreciation is the key here. If you were to purchase, let's say, a $40,000 vehicle, you can deduct around 90% of that vehicle in the first 3 years of ownership. This is a huge deduction that, if used properly, can save you a pretty penny in your taxes. All right, number 6 is electing to be taxed as an S corporation. I've talked about this strategy in numerous videos on the channel that you can look for and find. This is one of the single best tax strategies that you can use and could potentially save you thousands of dollars in self-employment taxes. I would say actually tens of thousands of dollars. I can't tell you how many people I get on the phone with for legal strategy calls, and one of the first things I ask them about is their revenue and whether or not they've elected their S Corp. And I'm amazed by how many people have not elected to form an S corporation because they're scared of doing it or the process or something like that. But this is something that can literally save you tens of thousands of dollars on your taxes at the end of the year. All right, number 7 is the qualified business income deduction. This is also known as the 199A deduction, and this allows you to deduct 20% of your qualified business income directly off your bottom line. So when you use this in conjunction with the S Corp election, this is a powerful strategy that can really save you a lot of money in taxes. So for example, if you were to make $150,000 a year and you paid yourself a $50,000 salary and you took $100,000 as your profit from the business and you were an S corporation, then you could deduct an additional $20,000 or 20% of that $100,000 off your taxes. So now you just took your taxable income from $150,000 to $130,000 just because of this strategy. Number 8 is self-employed retirement deductions. As an entrepreneur, did you know that you can deduct up to $57,000 of your earnings in retirement plans such as a solo 401k or a SEP IRA? And those are 2020 numbers, by the way. Now, this is a far cry from the $6,000 that you can put into an IRA on your own, or even the $19,500 that an employee can put into their employer's 401k. Number 9 is to start a health savings account. You can put up to $7,100 into an HSA in 2020, and you have until April 15th to do that. And yes, you can start these even if you are employed by someone else. This is one of the few strategies where if you're employed by somebody else, you can still use it to save money on your taxes, but you must have a high deductible health plan. And if you work for someone else and you don't have control over that and you don't have a high deductible health plan, well, on the one hand, that's nice because you get more of your costs paid for, but on the other hand, you can't use an HSA either. The 10th strategy I'm going to talk to you about is not directly related to online business, but it is a strategy that when you've exhausted all the other strategies and you have extra money lying around and you need to do something with it, I would strongly encourage you to buy rental real estate. If you don't know what else to do or how to start a business of your own, then you want to consider purchasing a rental property. You're going to be able to deduct the cost of your mileage, your travel expenses to look at properties, your purchase costs, property management, and more. Not to mention that you're going to be able to depreciate the cost of the properties each year, which is going to even further lower your tax burden and your taxable income. Now, some of these deductions have time-sensitive deadlines, so make sure you spend some time trying to determine how best you can incorporate these strategies into your online business. And if you don't already have a side hustle or an online business of your own, now might be a great time for you to get started. Now, here is another video I did that covers some additional tax strategies for online businesses. Hope you enjoy that. Hope you enjoyed this video. I'll see you in the next video. Take care, folks.